Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. Well, it's Christmas week, right? I mean, this is a week where the market's very low volume, but easy to push the market around. Last week we pushed it down 1,000 points, up 1,000 points. Very easy to move the market when a lot of the professional traders have already gone on to vacation. So this week there may be some volatility, but it'll be on very light volume. Now we got that nice rebound on Friday, right? Now what was that? My opinion is it was the Fed coming in and buying the debt. What were they buying? They were buying junk bonds. You can look at the HYG. Just my take. I believe that was the Fed buying them. The TLT went up a little bit. The Fed came in and bailed the market out, but can it bail it out? I don't think it can. I think there's more downside risk here. Now, I hope we can get through the month of December before we see a lot of this shake out. But there's a lot of problems right now. I'm looking at the IWM, the Russell. The Russell's in trouble, right? Those are the small caps. Now on the Russell, half of the companies do not make any money, right? So half these companies could be going out of business. Now that'd be major job losses. And like I say, we want to get through December, have a good Christmas and all that stuff before we get to the job losses, before we get to the bear market that's coming, the recession that's coming. Nobody believes any of that's coming, but I'm telling you, it'll get here soon enough, and then maybe you'll believe it. All right, today I wasn't really sure what to talk about, so I wrote down a few notes, and we're kind of going to go through some of it. Let's start with the real estate stuff, right? Now, everybody was told that bought in the last couple of years, they've been paying up, between 7 and 8% on their mortgages for their house, and most people bought houses that stretched them, can't afford them, right? But they were told that the rates would come down and they could refinance at a later time, right? And that way they would have the house they want, but then they get the low rate they want also. Well, there's a problem. Rates are actually going up. They're not coming down. This is a problem, right? This is a problem for real estate. Real estate, you can look at the real estate stocks, look at the home builders, look at Lennar, look at Toll Brothers. They're in free fall. Soon house prices are going to be in free fall. Just my take. Nobody believes that either, and that's okay. I don't need you to believe that. I'm a real estate broker. I want you to think they're going to stay up here, and I hope and pray they do so that I can continue to make a lot of money. But you see, this year, 2024, we're going into 2025. In 2024, home sales were at a rate of 4 million for the whole U.S., for the whole year, 4 million. Now, what does that relate to? That sounds like a lot, right? No, that's as low as it's been. You'd have to go all the way back to 1995 to find a time where the market was slower. Now, do you know how many people were living in the United States in 1995? I don't either. But anyways, it's a lot less than we have now, right? We have a lot more people, but yet the home sales are down here back at 1995 levels. You see, this home market, it's going to get hammered. It's going to get hammered over the head, and probably 2025 is going to be the year because of job losses, because the economy is going to slip into a recession, because we're going to see the first bear market that we have, 16 years of a bull market. Now, people in the comments, they tell me that bull market's still intact, got another 5 or 10 years left in the corner. And they know, right? Those are the moon boys. Moon boys know. But anyways, I don't think they know personally. And I think we're coming into a bear market. I think the recession, actually I already think we're in a recession. We could actually hit depression levels if we get that job loss coming in a big, thing, and then everybody's selling their houses, asset prices start to crumble, could be really scary. You see, what we're looking at, look at right now, what are we in debt? I mean, just the U.S. government debt, $37 trillion approximately, right? 36 trillion, I don't even know. But I do know that we're printing 4 trillion a year. So that by the end of 2025, we're going to be over $40 trillion in debt. Now, $40 trillion in debt. Now, once again, the government's spending money, kind of like the people that went and bought a house, hoping that the rates will come down so they can afford the debt. But the rates aren't going down. Their rates are starting to go up. They cut the short end. Long end is exploding higher. Inflation's going to explode higher. The rates, they're going to go higher. I think they're going to go up 10%. But okay, let's just talk about 5%. Okay, you got $40 trillion at 5%, right? $2 trillion just in interest on the debt, right? Now, this doesn't count the 200 trillion in unfunded liabilities. Doesn't count that. I'm just talking about the 40 trillion that's going to hit. It's going to hit 40 trillion in 2025. 5%, $2 trillion. Well, how much do we bring in? Bring in about 4 trillion. Okay. So half of the tax money that you send in goes just to pay the interest, right? Now, this is a big problem. Now, my point to all this is that the whole system is not sustainable. The whole system is going to be going away. We're going to get a new system, right? Now, you got to look at this. Okay. So the dollar which will go away, but the dollar is the debt, right? The dollar is the debt. Okay. And debt is money, for lack of a better word. It's not gold and silver, but it is purchasing power, right? If I were to go farther into debt, I could go buy a car, right? I could use that as purchasing power. So basically the debt is money, right? Okay. So now they want, if you were to decrease the debt, you would decrease the money, right? And if you decrease the money, eventually someone's going to default on their debt. So we can't decrease the debt because it would be a death spiral. Someone defaults and someone defaults and someone defaults and the government defaults and everybody defaults. Okay, either way, that's one way that you would get the reset, right? The other way is go until it blows. You see, we can't decrease the debt. We have to keep printing money, have to go farther and farther into debt, have to go until it blows. That's the other way. But either way, the system is going to go away. The system being the dollar. The dollar is going to disappear, right? Now, granted, maybe the stock prices go up in nominal terms. Maybe your house goes up in nominal terms. In real terms, it's not going to be worth anything, right? Okay, now you get some real money, some gold and silver, right? Now, I keep saying silver, 500 ounces will get you the average price home in the United States. Average price home about 400,000. Silver trading just below $30, right? 500 ounces, less than 15,000 now, right? You have to pay a little premium. So let's just use 15,000, 400,000 going to turn into a swap, right? You're going to be able to switch this 15,000 for that $400,000 house. Why? Because the houses are so far overvalued right now. Everybody, most unaffordable in the history of the world. Right now, housing is the most unaffordable. Now, it's going to revert back. Now, in 2000, what was it? 1980, 1982, you could get a house for about 700 ounces of silver. It's going to overshoot this time. It's going to be only about 500 ounces. Now, okay, now what about gold? Gold is going to go 1-to-1 with the Dow Jones. 1-to-1. Where's the Dow Jones at? What was that? 45,000. I think we dropped 2,000 or 3,000 points. Let's just call it 42,000, right? 42,000. Where's gold at today? Right around 2,600. 42,000, 2,600. You're going to swap those out, right? They're going to be 1-to-1. You're going to be able to go buy one of the Dow, 42,000 for 1 ounce of gold. That's going to happen. This is what my take is. This has happened before. It happened in the 1931, thereabout, and it's happened in 1982, and it's going to happen again. Okay, now that's why you want the real money. But Mike, we got Bitcoin now. Now, don't get me wrong. I love Bitcoin. I do. I love it for gambling, right? I mean, it's great to just go and gamble on. I love that they're educating the young people, right? I mean, they're educating the young people that the dollar has a problem. Now, my take is Bitcoin's not the answer, right? But here's the other reason I like Bitcoin. You keep pushing that higher, my gold's going to stay affordable. More of us can get into it. We're going to have more time, but it's going to switch also. You watch. This is just my take. You do you. I got to do me. I'm a gold and silver guy. Those are sound money in the Constitution, right? Bitcoin's not in the Constitution. Now, granted, it wasn't around back then. Bitcoin's not in the Bible. Oh, it wasn't around back then. You want something God made, or do you want something man made for your money? I'll take something God made. That's just me, though. Look, I mean, I know the Bitcoin, that's their, Bitcoiners, their religion's that Bitcoin, right? They're really entrenched in that. I mean, it's almost like they're brainwashed, right? I mean, you just look at them, kind of look at you with the glazed eyes going higher. Michael Saylor says 30 million, and maybe they're right. I hope it does. I hope it goes that high. That'd be wild. They'll be giving gold away. Okay, and I'll be buying all of it because eventually it shifts. Just like the housing market. with 500 ounces of silver. Eventually it shifts. Just like the Dow Jones with 1 ounce of gold. Eventually it shifts, right? The shift is coming. We got time here. Look, we're coming into the new year. And I don't want to be talking all this negative stuff, right before Christmas. But the dollar is going away. The system's going away. It's a Ponzi scheme, right? It's a Ponzi scheme. Look, there's debt all around the world, and they need dollars to pay the debt. And the more debt they get, the more dollars they need. This Ponzi scheme is coming to an end, though. Look at Bernie Madoff had nothing on our U.S. government. Believe me, our U.S. government is the biggest Ponzi scheme out there, right? I mean, they just print into oblivion. But when this breaks, there's going to be a lot of problems. You see, a lot of things are going to break with it. Your pension funds are going to break with it. Your retirement system is going to break with it. And that includes Social Security, I'm afraid. Now, I actually believe they'll hyperinflate and make everybody get their Social Security checks, but they won't buy you anything. It's going away, right? I mean, the banks, the poor banks are going to be failing. It's so sad. It's so sad. They're starting to get banks that are backed with gold. They're actually going back to that because people want that. People don't want their money in these other banks. These other banks aren't backed by anything. In the old days, every bank was backed by gold. They had to have gold in their safe. It was required. It was a requirement. It was required to have gold because it was backed by gold, right? You had to have 20 to 40% of the money in reserve in gold, right? Now we got Fort Knox out there. Nobody knows if there's any money in Fort Knox. Somebody should go open the door and take a peek. Look what's in there. Do an audit. Why? Look at these government officials. They work for us, but they keep us in the dark. We don't know if we have 8,000 tons of gold. It's not their money. It's our money. It's taxpayer money. Somebody go take a peek. Somebody look in there. See if we still got this stuff. See if we're in trouble. We could be in real big trouble here, right? If we don't have it, what are we going to reset against? But Mike, we got Bitcoin. Government's going to buy all of it, and then it's going to be great. Everything's going to be fat. And maybe you're right. Maybe you're right. But the banks are done, right? Credit's breaking, and when credit breaks, bad things start to happen. If you can't get credit, you can't get a loan to buy a house, what happens? The real estate goes down. Can't get a loan to buy cars, it goes down. All of a sudden, it's only cash value, right? Because the credit breaks, the system breaks. It's going to be really hard to get food. You want to have some extra food lying around. Look, I don't know if it's this year, next year, what year it's going to be. When credit breaks, the food supply breaks. They can't get the food to the grocery store. Why? Because the farmer uses credit for his tractors to plant the stuff. Then they use credit for the trucks to ship the stuff. And the grocery store, they use credit to just to run the business. Credit system breaks down. You're going to have trouble getting food. This is serious. Look, people say I'm a doom and gloomer. I really don't see it that way. I just see that I'm good at math, right? You can be good at math too. Do $40 trillion, multiply it by 5%. You get $2 trillion. I could teach this to a seventh grader. Now, $2 trillion is half of every tax dollar is going to go to the interest. It is not sustainable. A seventh grader could tell you this, but the people in my comments, the Moon Boys, they say the debt doesn't matter, that it can just go on forever. I'm telling you, the system goes away. The debt's going to break. The credit's going to break. There's going to be problems. Look at. We got 2025 coming, and believe me, it is going to be a banger of a year. I mean, it is going to be wild. I mean, hold on, buckle up, Buttercup. We're just getting started. I mean, this is going to be wild. Anyways, I got the Christmas week here, a little short video for you. You like it? Give me the thumbs up. Why not? Punch the subscribe button. Everybody, have a very Merry Christmas and just relax and enjoy. Bye-bye now.